All right, we'll get it started for today. This will be recorded, so if you have to leave, feel free to. This is our standard Q&A / market review for the week of, what is it, June or July 6th. All right, so we're gonna cover the weekly price action, biases, the setups, and I actually had a losing week this week, so even more of a reason for me to review. And obviously we'll go over risk management and things like that and how that's beneficial, looking at it from a weekly perspective. And then obviously psychology or any questions you have related to the markets, ICT, psychology, anything, you can put those in the chat and we'll get those answered as well. But first on the agenda is the market review and overall just the kind of higher time frame structure we're in and then getting into the lower time frame. I'm going to say right off the bat, for me personally, this was probably one of the hardest weeks I've had to trade in. I think the consolidation range in June was easier for me. I don't even think I had a losing week in June. Not that it really matters, but I was able to read it decently well in June while I was consolidating, which is what I'm trying to portray there. Which who cares, right? But I'm just trying to say for my own personal, kind of review, this is one of the weeks that I can learn from. Where either in the pre-market, in the lower time frame charts, I have something to improve on, and there's either a psychology bit from that or some sort of technical bit that I can improve on, typically both. Right, so when we're looking at the higher time frame chart, we can go to the daily and the 4 hour. I also want you to notice that, obviously, before we even get into the charts here, all of the indices are not misaligned, but they're not moving together. Okay, NASDAQ compared to ES, compared to YM, they're all very range bound, and it makes for some pretty difficult price action as well as it being misaligned. Very hard to trust any sort of SMT, right? You're gonna have SMT on both sides of the market, and that being present makes it harder to obviously pick, oh, this is going to be the daily low, this is going to be the daily high, this is going to be the weekly low, weekly high, and then find a one-sided direction off of that. You can obviously see during the first half of the week, we just have a lot of consolidation. Actually, throughout the entire week, it's all consolidation. But just notice the lack of any inefficiencies forming, right? We have no breakaway gaps in here, Monday, Tuesday, which is fine. But by Wednesday, since we have this, trade back into the range it was either Wednesday or Thursday stream. I believe it was Thursday stream, where I had mentioned that, okay, we had dug into a 4 hour gap down here, which is an IRL. We traded up into an ERL up here. Both of the weekly objectives had been met. So on Thursday, I was looking for either a continuation higher through this swing high, and I could look for longs pretty easily, or for us to drop and start to either trade through this gap or take out that swing low and then look for the current weekly low as a sell side. So on Thursday, I was kind of flat in terms of my bias. But it just stayed within the range, kind of back and forth. So I want to kind of dig into the weekly profile for this week, because for me personally, the sessions are more or less the same, meaning all the sessions are going to kind of have the same characteristics. If you know where the bias is, and if you understand your model, 90% of the time, you're going to be able to get an entry. At least that's just for me. Like if I know where the draw on liquidity is, I know all the other things are, okay, this is true, this is true, this is true. Finding an entry is not super hard. And I don't think that's irrational to say. So for me, the most important thing is bias, right? If I am struggling with my bias, or if I'm not confident in it, it's going to be number one, easier for me to flip, and number two, easier for me to take a loss, right? As you improve in your model, there's only really 3 ways you take a loss, other than psychology, right? You either read the bias wrong, make this a bit smaller, get your bias wrong. Number two is you mismanage your stop loss, right? You just do something stupid or with the trade. Or number three is you misidentify the day as basically as high probability, where you think, oh, it's going to be a good trading day today, ends up being a consolidation day or week, you end up taking a loss or consecutive losses because of that. And for me personally, it was a combination of probably number one and number three why I took losses this week. And I think also on Friday, there's probably a bit of psychological things for me, which I want to address as well. Just things that I should have known, and I think I was more concerned with finding an opportunity on Friday that may have not been there, and that goes into misidentifying the day as high probability. But it's this is the hard part about trading, right? For me personally, I have the same approach this week that I do with other consolidation weeks, and I feel that all of my biases were rooted in sound logic and confidence, and they ended up all producing losses, which as a normal human being, that's going to be very frustrating, right? It seems like you do everything right and then you still lose, or you do everything right and then there's no setup for you. And that's the hard part about trading, and the psychology part about trading that is new to a lot of people who aren't traders before is you can do everything right. The market still doesn't work out in your favor, but you have the undying confidence that you know you're going to be perfectly fine. Because there's number one, an opportunity to learn from that. And number two, if you manage your risk properly, it's not going to do any damage really substantially against your account. All right. For example, I've had this demo account for the past 2 months or so that we've been running up on the live streams. So if you want to see that live, you can join up as usual. But the trade I took last Friday, up here, or last Thursday rather, that total trade equated to more than the entire week's losses. So the loss Wednesday, Thursday, and Friday, all of which were contained within the Thursday's win alone. All right, that's the importance of risk management. Okay, so it makes it number one easier to deal with losses, and number two, you don't have to spiral out of control because I'm digging so far into drawdown that now it feels like you're scrambling to get out of a pit that's digging itself deeper. All right, so as we look at this higher time frame chart, well, like I said, we'll go into the actual technicals now, but it's good to get that stuff out of the way. On the daily chart here, you've got a daily PDA rate in the form of a bullish order block. Okay. You can send that opening price out if you want. There's also a mean threshold of this order block right there. And you can see it tags it, misses it by a point right there. So bullish order block, overall structure of the market, I think was pretty bullish coming through all-time highs. You're not trying to pick tops or anything. So I think for the most part, in terms of most people's weekly analysis, okay, we're expecting bullish price action for the week. At least that was my expectation for this week coming into Monday. 4-hour chart, like I mentioned, we had this inefficiency down here, traded into on Monday, and then expanding up and taking out the buy side from previous weekly high on Wednesday. Whenever you see these kind of conditions met early on, and this is what I was talking about on Thursday, I'm already thinking Thursday needs to continue, right? We need to continue in some way past this buy stop rate, especially if we already have the IRL tagged here. But you see a lack of displacement away or in any direction really throughout this entire week, right? You look at the 4-hour chart here. There's no bisis that are forming throughout this entire weekly profile. Your eye may draw to this, but I want you to look at this and say, okay, is this really inefficient? All right, you just had all this price action working through here, down, up, all that paint being applied, and then it goes back up. Is there a gap in paint here? Is this going to be really inefficient compared to something like, something like this, right? Or something like this even? I think there's a little bit less paint applied throughout that range compared to something like here. And you look at this as preferably as a breakaway gap. If it does form and there's a gap up here, you would see that uses more of a breakaway gap. In this case, it's just a weak indication that there's not really any one-sided directional movement that's going to be clear to spot in this kind of weekly profile. As we go to the 1-hour chart, I have the news drivers marked out here. And the major news drivers for the week was FOMC minutes on Wednesday. And then we had an unemployment release data on Thursday. This was at 2 p.m. and this was at 8:30 a.m. on Thursday. And now, based off these news drivers alone, you normally can gather some data about the week. And that's, I'm saying like pre Sunday opening, right? A lot of times you can just come into the data for the week. You can see these news drivers and expect, okay, there's going to be probably a move on one of these 2 days off of some sort of 4-hour PD array. And also you can maybe gather the weekly profile that's going to be used. The weekly profile this week is extremely hard to find. And I had some trouble myself trying to go through and see, okay, what weekly profile does it actually match up with? And I'm stuck between either a consolidation reversal template or a seek and destroy bearish template. If you go in and watch the Core Content Month 7 video, it's a very good video. I'll link it in the chat here if you want to go in and watch it. But you normally have, so when you look at the how to anticipate, you normally have a rate release around Thursday at 2 p.m., which it's around Wednesday and 2 p.m. So that, okay, that's close. And then you also have on the seek and destroy bearish profile, you have employment data coming out on Thursday as a high impact or medium impact sales news driver. So both of which are present. You have FOMC minutes and an employment data news release on the board for the week. Now, this one you'd prefer to have on Thursday as well, but it's a day earlier. And then unemployment here. So you're already expecting this kind of consolidation / intra-week just chop. Either up until these numbers release, and then you either have Thursday create the high of the week and you continue down to the low week, or something like this, where instead Wednesday creates the high week and we're still stuck within this. And now even given those two weekly profiles, you don't see any continuation on the later days of the week. Thursday, Friday here, do not go for that weekly low. If you want to pull up, I don't know if there's yeah, my bias here, very brief bias I sent yesterday morning into the private group, which was, okay, I'm bearish for today's price action. Target is current daily low and then the current weekly low. So if this in fact was the weekly high, and this was something like a consolidation reversal profile, maybe a day early or even like a Wednesday high of week, something like that, we should be targeting this Monday low, right? That's the intra-week low. And normally you have a nice fib extension that you can be targeting. And that right there is normally what we're looking for as our intra-week target for Thursday or Friday to expand to. And you see in here, it doesn't even get down into that. It gets down to these intra-week lows, which are relatively equal, runs that, and then Friday moves back into the range, right? So overall, okay, let's say that either the weekly profile is a consolidation reversal / seek and destroy bullish Friday. Already two of the hardest weekly profiles. And actually for the seek and destroy bullish profile that's in that video, it is one of the only templates that I see. It's actually, I think, the only template that ICT says in that video to avoid. And because of the fact that obviously it's going to be very difficult price action, but also the outcome of the week is more important than the week itself. Because normally when you have a consolidation week like this, especially now near these highs, depending on what the news does at these highs up here, this is a catalyst for a long-term reversal, potentially. So if you see this, previous weekly high up here, and especially all this low resistance bias liquidity printing, it is potentially a catalyst for a long-term reversal if we were to take this high out, and then you can start to look for sell stops or inefficiencies on a higher time frame, like a day, week, or month, that we can now be running. All right, so normally you want to avoid this, and that's something that I can learn for the future is just, when you see this Monday, Tuesday kind of consolidation range, and then Wednesday especially doesn't start to leave the consolidation range, something I probably want to be avoiding avoiding trading. I also want you to notice, the actual session moves compared to how the week played out. All right, you could say, okay, between Monday and Wednesday, it's bullish, right? Between that range. But I want you to notice where actually did the session go during those days. On Monday, the session was bearish, right in there, blue. I'll highlight it in blue for you. The New York session was bearish. On Tuesday, the New York session was also bearish / seek and destroy. If you saw Tuesday's price action, it was absolutely terrible. Wednesday had almost a neutral. It went up instantly, and then right at 10 a.m. it came all the way back down to the 9:30 open and basically was flat. Okay. Thursday was bearish in here, and then comes back up and retraces that entire range. And then Friday was bullish. And you can see that none of the price action actually moves anywhere. You got down, down, flat, flat, or basically down and then up. There's no continuation. There's no displacement. There's no continuation to say, oh, this day previously made the high with SMT, and now we can look for a continuation the other way. And that's why I'm very interested in anyone who was able to capitalize on these later, the Wednesday, Thursday, Friday moves. I'm not really interested in these two, but these moves, how you arrive to the biases on each of those days. Because to me, to be able to find a bias intra-week like this and know, okay, it's not going to be a continuation, is very against the grain. It's very like it's not normal, right? Especially if you see, okay, if I say we failed to swing, we had SMT up here on Thursday, Thursday drops, we had another drop on Asian, we're tracing back into the range, and we got a gap here. I think 9 times, if not 10 times out of 10, I look at that kind of price action, I would be bearish. And I don't think that's insane to say either. I think it's not crazy to say, yeah, I want to target this swing low and then target the swing lows down here. You know, coming into, if you see this price action again, obviously with hindsight, it's a little bit easier to see, but right? It's not crazy to say. So that's why I say, okay, this week, you know, it's a bit frustrating because of the fact that you may have similar kind of scenarios that you see every week and then it doesn't play out. Right? I think and it's either something to sit out on or to improve. And for me, I look at this as, okay, is there actually anything that I can come into this and fix in terms of a bias? I don't think, you know, I think maybe Wednesday or Thursday, I could have seen it better. Friday is not something that I would have been able to see except for the psychological mistake, or not psychological. I guess it's technical and psych mistake that I made on Friday for a scalp. And maybe my approach this week was wrong, but you know, you only have, in terms of learning, you know, there's obviously you can fix and tweak the model, or you can choose to sit out. This is one of those weeks where I think it's better for me to just sit out than to tweak anything, tweak my approach. I can look for scalps, but there's not going to be any one shot, one kill like we got last week. There's not going to be any daily moves that I can hold like last week. It's just going to be trading just the session move, or maybe even sometimes just the macro move. I don't really want to be ever be trading just the macro move. I want to be getting at least the session. So we'll look at and break down obviously kind of the sessions for the week. But even I think when you look at Wednesday, even the entire week, Monday through Friday, not even the sessions are following their standard protocol. I know Friday did. Thursday may have. Wednesday definitely did not follow what it normally should have looked like. You know, and then Tuesday, Monday were kind of seek and destroy days. So I look at this as, okay, from the data I've collected, based on the bias, based on how the week played out, this is something that I should either be completely sitting out on the entire week, Monday through Friday. I sat out Monday, I sat out Tuesday, and then I ended up taking trades all these days. So either to sit out or to just trade session moves. And if I'm just trading a session move, then my higher time frame bias is not going to matter that much. It's just going to be looking at the 1 hour and smaller time frames to just find where that next candle is likely to go to. And sometimes waiting for the opening range to play out and just getting a macro scalp, which is what I should have done on Friday. So I think this is important because sometimes we look at this and it's either frustrating or it scares you because of the fact that obviously price action is not really doing what it normally is doing. And someone who's very new will think that the algorithm is breaking. It's not that at all, I promise you. So just get that fear out of your head completely. It's rooted in nothing but evil and just misinformation. Number two, it's just going to be like, okay, how am I going to get my 50 points per week? Or how am I going to reach my targets when weeks look like this? And we sometimes tend to project these weeks and these fears that we get this week into the next week, right? Sometimes you feel like, okay, I didn't get an entry this week. So then next week, Monday, whatever the price action is, I'm going to get in there and tear it up. Not caring about the news, not caring about whatever's going on. You look at the economic calendar next week. Tuesday, you have CPI. Monday, you have no news. Do I really want to be trading Monday? Most likely not. So we got to contain all the negative emotions, positive emotions, neutral emotions about this week within this week. Do the review and then be done with it. All right. So we'll look at. I'm most interested in Friday's price action and kind of the approach I guess I would take to look at something like that and potentially even trade it. All right. But this to me, this whole, the first 20 minutes or so that I've been yapping, this is the most important part for me. Because like I said in the beginning of this, I'm normally able to find a setup. It may not be a winning setup, but I'm able to find an entry towards my draw on liquidity if my bias is correct. If I'm confident in my bias, if I know what I'm looking for, I feel like most times, maybe 80 to 90% of the times I can win. It's times like this where I'm very low confidence or hesitating, or there's not a lot of data to be used for a bias that I end up losing intra-session because there's nothing that I'm rooted in. And ICT actually says in that video that the seek and destroy bullish profile, you have a less than 50% chance of getting it right. If you see the intra-week highs and lows constantly being taken, the chance of you getting it right after Tuesday or after Wednesday is less than a 50%, which I see that completely. And I that's what I'm saying. The kind of data that I get out of this, the learning opportunity, is either to sit out or to scalp intra-session. So we'll look at Friday. I think Friday had some of the best price action actually for the week. And the session that goes on through there. I think Thursday, on like a session buys intraday, was pretty decent in terms of reaching most targets and putting the high of the day and the low of the day was rough though. Yeah, I agree. I 100% agree. I was fine with that price action. I think I was a little bit too rooted in looking for longs. I like the SMT up here. There was precision there, simple, and I like that. I said even on Friday, there was precision on the way up, and I love seeing that because then I know, okay, it's still a good move. And I think you're right. I think that 930 high of the day, perfect. Dropping back down, but then as you look at the targets, right, we're going into an IRL here, that's fine. It reaches those targets, then the rest of the day, boom, it just comes back in and stays within that range. It's like a 1 hour expansion for the day, right? And so that's why I agree with you there. Quick question. I know you've touched on it many times before. What would constitute the requirements for Monday finishing the move from the week prior? If Friday doesn't move a lot, so the main question is, I guess, when is Monday going to expand is when you don't see Friday complete the range. If the objectives for that current week have not been met, you'll see Monday continue. On the previous week, right? Thursday runs out the current weekly high, expands up to fib projections of -4 that we were looking for. You could even use this one if you wanted to, right up there. So it completes those objectives. Monday's not going to move. It's going to consolidate. Now, actually, now that you bring it up, next week, Monday has a very high chance of probably running. I mean, you got this and this. So we got to see what the new week opening gap is. And if anyone bombs anyone this week, then we'll probably get some good price action. Not to be mean, but that's kind of how it works. So yeah, it's when Friday or Thursday, normally when Friday does not complete the weekly objective, whether that's a fib projection, an extension, or an actual liquidity pool or fair value gap, that's when you see Monday will move. And also preferably when Tuesday does not have any high impact news such as CPI or PPI or anything related to that. Right. So that's why Monday, okay, at best it would be medium just to run previous intra-week stops. It's not going to go for here or here most likely, unless, like I said, we have a large new week opening gap. But Tuesday's normally going to be that better move. Got what? Unemployment claims again on Thursday next week, so we got to watch how that goes. But it looks pretty fine. We got Wednesday and Tuesday high impact news, so should be a good weekly profile. But Friday's price action, right? So Friday, we come into it, we can run the relative equal lows down here, runs those stops, comes back into the rejection block here. You may have had a SMT. Yeah, you do have SMT at those lows. So you have SMT at these lows coming into it. Whoops, that's Euro USD. So run on sell stops, SMT with ES coming into the session. And this would be an ERL sell side. And then you have internal range premium up here. All right, in the form of an inefficiency on the 1 hour chart. You could look at this 1 hour chart and say, obviously this is a larger gap, and anytime I'm targeting this kind of large inefficiency, this is why I don't like trading from ERL to IRL. Obviously, number one, it's going to be a harder bias, but number two, how far do we go into the IRL? What you could look for is either an inversion fair value gap on the left side, so a gap normally between this low and this high in the form of an inefficiency. You can narrow that down within this larger gap, or an order block. In this case, you have a, you could either use this here, which you can see is pretty precise with the targets. You could use the wick low. You could even use the market structure shift if you wanted to. All of that, oops, the market structure shift is right here. All of that is going to be reasonable for targeting inside of the IRL. And if obviously you want to fib project, you see, okay, that lowest portion is in premium. So how far are we going to go into this? That's what you could start to look for. So this right here would be the lowest portion of the order block. And you can use that to refine down our targets. So in this case, we're going standardly from ERL to IRL. And also notice that even on these low probability weeks and low probability days, the way that you find bias and the way that you analyze the days is going to be the same, meaning they all have to be rooted in some sort of market truth. The thing that's always true, despite if it's high prob, low prob, moving directionally or not, there has to be something that you always root price action in. And for me, that's going to be the market truths. The things that are always true regardless of price action. So we know that price action loves to go from sell side back to an internal range, ERL to IRL. We also know that the day then, if we're looking for bullish price action, should follow something like this for both the day and the session preferably. But like we said, since we don't have the week of the day, we're going to be mostly focused on how the session moves on Friday's price action. All right. So, some water. So, for the session then, obviously if you want to screenshot this, I'll screenshot this. Put in the chat, you can store it for a Notion if you want to. 15-minute chart. You should have something similar coming into the session. We can mark out midnight there. Obviously, you can start to turn on these kill zones if you wanted to. So SMT with the Asian low. Weird daily profile in here. I agree. Very hard to see. And then on the 1 hour chart, since you have the SMT at that lows, and if that's the entry point, you can even refine down this IRL to up here. So this kind of refined down 15-minute IRL. Right in there. For the session move, you've got an inefficiency in discount here between this dealing range, high and low. And you can see it's even overshooting that. Right? You don't love to see that there, but it is overshooting it, coloring outside the lines. Is there a 1 hour gap? There's not really anything good there. Yeah, so another kind of evidence of it be a little bit just kind of weird, right? If you maybe see 930 expand up, which it does a little bit, but falls short, digs into a premium array, comes back at a discount, then tags the high, double Judas swing on a lower time frame. But lower time frame, you could see inefficiency here, the IRL. Can obviously start to refine some of this down. We got the ERL there, and then obviously the higher time frame IRL for the daily move, right? For session, it would be from here to here. for the day would be from the sell side to the IRL. So if that gets confusing, that's the kind of, it's based off ranges. So the day, the week, session have to be following that specific one. So in this case, this would be the session target, or even this would be the session target, right? Buy side. And then this would be more of the daily objective. We got 9:30 right here. No news on Friday. So what would be the preferred method of entry on a non-news day? Normally be macro time. All right. If you don't know that, learn it. And that's the error that I made on Friday. Very simple error, I think. And that's why I think there's probably some psychology stuff behind that, either of me wanting to forcing myself to end the week green, or, maybe be frustrated with the price action. It could be a combination of those two. I think more than anything, it was just me trying to impose my will that the market was going to be high quality today when it was just staying within the consolidation. And it goes back to that quote of, the market can stay irrational longer than you can stay solvent. And that's why risk management is going to be absolutely the pinnacle of your trading, right? Because if you are not managing a risk, and you, a day or even a string of days like this shows up, you don't want to have to blow your account. You don't want that to even be a possibility. So I think for me, the reason I lost on Friday, maybe slight emotional baggage from Wednesday, Thursday, but I don't even think it was really that, because I feel like on Friday I was feeling refreshed. It was more of just me trying to force the week to be good when it was constantly showing me that it wasn't willing to move. And that ended me taking a loss on Friday that I probably could have avoided, simply because then I was too, it kind of spirals down. Okay, if I'm forcing it to be high probability when it's not, then I'm looking for then an earlier move when I believe it should be moving. Even if it's true, right? 9:30 is going to move on that kind of day towards that sell side objective that I had. It's not going to happen. It's going to wait for the macro time. That's my error, where it goes down from psychological to technical. And the fact that I missed the highest quality entry opportunity of 950 just leads me to believe that, okay, why was I looking to enter earlier? Okay, why was I even looking to enter before that? And then you can go back, okay. Now trying to impose my will into the market. That's what it is. All right. So as we look back in the price action, obviously 9:30 comes in, 5-minute chart, you can start to look for the standard things. But like I said, it's going to be hard. Yeah, this is a day you have a double Judas swing, where 9:30 trades up, trades into a premium array, fails to take out the high, drops back down with displacement below that swing low. And this is where I was getting in short. I saw someone else do the same thing, which I think it's still a high quality trade if you're bearish, right? You got higher time frame PD array tagged, you got a 5-minute SysD, you had a 1-minute fair value gap or a 15-second fair value gap within the SysD, standard breaker entry. In this case, it just doesn't work out. But looking for the bullish side of things, right? You got 5-minute chart here. Let's make this a bit cleaner. This right here would be your change of state delivery. That'd be a change of state delivery after the higher time frame PD was tagged, and you preferably to see SMT down here, which there should be. Yep, you got SMT with YM and NASDAQ, and even with the, obviously the daily low, but that's the daily SMT. We're looking for session SMT. So session SMT at these lows, right in there, displacement up, taking out this 5-minute SysD. That would be their kind of requirement for the ATM model. So then you would hunt now 1-minute entries on the 1-minute chart. You can see in here you have, actually, let's go back to the 5. Got this gap, which is barely traded into. Right in here at 955, that'd be potential first entry if you wanted to. You also have the first presentation gap here being used as kind of a inversion PD array. You also see this breakaway gap, right? You have a balanced price range in here, also supporting inefficiencies with the inversion gap. This changes day delivery and also time of day. This is going to be left open as a breakaway gap. I wouldn't have mind if it tags slightly down into there with just the wick, but the lower portion of this should not be filled at all if you're bullish, right? So this would be first macro entry right in here. And then it starts to leave it away, tags a premium array. What's tags a premium array? What should it do? Offer a short-term discount. You would not like to see this entire range discount, because why would it come all the way back into here? Rather, the short-term discount. You have an intermediate term low here. Why is an intermediate term low? Because it tagged a gap, it left it, and formed a short-term low right after it. Right? So inside here, short-term low, leaves it. Okay, now you're anticipating that to form as an intermediate term low. And then you got candle, candle, candle. Boom. As soon as that candle closes, that's a short-term low. This now creates this as an intermediate term low. Okay, what do we know about intermediate term lows? They form dealing ranges. They also are the true market structure shift. So a stop placement below here, or just not even a stop placement, but just something to look at is, okay, if we were even to touch that low, doesn't have to close below it, doesn't have to do anything. If we were to take out this low by a tick, it indicates to you that there's probably some weakness in the market. But either way, tags a premium array in the form of the London high. And now you have a dealing range between here and here. Okay, this dealing range, what do you have? An inefficiency right in here. Perfect. You also have a bullish order block right here. Right? Also, this is during what time? Macro time. 10:10. It's also during the silver bullet hour. So macro entry there. You got one here. Actually, this wouldn't be really valid. You actually have this one. It drops into discount. That would be a fine entry. This one here would be preferred. Then it expands away. Nice order block being used there. And then it runs up into the 15-minute POI that we're looking at perfectly right at 10:35. So now you see the time dynamics playing out here. 9:30 to 10 formed the low, 10:30 to 11 forming the high. You also could have fib projections up in here. Target reaches the -2, -2.5. Doesn't get all the way up to the -4, which I actually would have liked it for it to do. Doesn't actually do that the rest of the day. But either way, higher time frame PD array tagged at key time. So that would be your preferred exit. And then you can see in here, the very high quality entry during the macro time. And then in here, another high quality entry during the macro time as well. And in terms of kind of a turtle soup entry long here, it's going to be very difficult, unless you're looking for, time of day is off slightly, and you don't really have a nice manipulation line. You could be using this to target the -2, -2.5, nor do you have a style stop pool that's tagged here. It's actually the SMT. So anyone who's looking for a soup, that's something you look at to study, but it's going to be much harder on this kind of day to find a soup. And as you go back to the earlier part of this stream, I mentioned that on non-news days, you want to be looking for macros, right? And this is where I had made that technical flaw that originated probably from my psychological flaw, where I had entered in here basically on these wicks at 940 and at 942, using this as kind of an inefficiency on a lower time frame with a breaker in here, and then targeting this low and then this low down here. And if I had just waited until that time of day, I see this large run up here. I think it's pretty obvious at this point. You wouldn't even need to see an hourly chart. You could just see the 5-minute and the 1-minute. Boom, that displacement with the balanced price range dropping back into this and now holding the 5-minute gap. I think this is a no-brainer entry. I can say that in hindsight and it makes sense, but I think for most people, that's probably not hard to see, right? Runs up, runs back down, then it comes back up into the range, balances this out, holds bullish PD arrays, displaces, tags a higher time frame PD array, drops into a gap and discount during the macro time. That's pretty textbook. And obviously then it runs up a decent amount of way. And if you were to use the best case scenario entry with the intermediate term low as the stop. Still not a bad setup there, 4.43R. And then obviously the rest of that kind of session just stays within the range. I don't think there's really anything in here that's precise after that. Literally is just the session from 9:30 to 11 o'clock, and then what stays macro time. The 1050 macro drops within the range. It gives you actually a good entry back into discount. Comes back up, runs the high, then it consolidates during lunch, comes up here, runs this high, and then it just constantly stays within that 1 hour bearish order block that we had marked out there. Just constantly wicking that. Obviously, the 15-minute inefficiency and such, and obviously stays within the weekly high and low there and there. So that's why I said Friday's session price action was probably the best that we saw. Just I like that kind of price action right there. You could look at Thursdays as well. It wasn't terrible. You had nice 9:30 manipulation, kind of the same exact breaker setup in here, right? You look at this in here, and you compare that to Friday's entry. This is where I was going short on Friday. It just didn't work out. So my bias was wrong. That's why I say normally I can get in, because you look at this price action right in here, you compare it to Friday's right in here, right? Coming into that looks almost the same. So I'm shorting it inside of this candle and this candle near that breaker, or what I suppose to be a breaker. And then obviously Thursday comes down and then consolidates for the rest of the session, which you normally don't see this 20 minutes of expansion, 37 minutes of expansion for the day, and then it consolidates the rest of the day. So that's, you could say there's some precision in the beginning, and then it falls off almost the rest of the day, just tags at array. And this is evident of what we got for the week. Higher time from array, consolidation all the rest of the time, waiting for a new time of day. So overall, that's kind of the market review side of things. And if you wanted to look at the numbers for the week, this is the trade from Thursday here. Actually, all this trade was from Thursday, 7/2, if my dates are correct. Sorry, Wednesday. Wednesday's trade. Back. Where's the 7/3 trade? Who knows? Anyways, this one right in here, closing out the rest of that one runner. The one runner for that daily range, holding it from the low of the day to high of the day, was enough to support basically the rest of this. These three losses. This one here, and this one here. It's actually less than, or this is actually more than all this by about 1K. So that's the importance of risk management, right? You take average of 2R, 3R plus trades. Obviously that one on Wednesday was probably close to an 8R. You manage your risk. You obviously are cutting it throughout the week. So on Wednesday, started with higher position size, Thursday lower, and I built into it almost the same. And then Friday was just lower again. Constantly stopping the bleeding is very important, right? You start up here, maybe whatever risk, X risk, you want to drop to Y risk, and then you want to drop to Z risk down here. So you're slowing the bleeding. And it's not just, you don't want your equity curve to look like this, right? And you don't want your equity curve to be seek and destroy. You want your equity curve to look like this. Oops. You want your equity curve to look like this. Quick increase. If you can get it like that, right? Say you took a nice 5R trade, whatever, and you want to steady to this, okay, negative 1R or 2R, whatever. Then maybe another negative 1R, and then negative 0.5R. You're stopping the bleeding. So your equity curve eventually looks like this, where it tapers off, and then it comes up, and it drops maybe and tapers off, and it comes up, and then it comes up, and then tapers off. So all your declines are being tapered, and then all your increases should be exponential. We want to push this range as fast as we can. We want it to be an exponential curve, right? We don't want it to just be a linear S&P 10% a month, 10% a year curve. We want to exponentially push this. And this is obviously with the power of compounding. If you know, compounding is just, it's just going to constantly increase that over and over and over again. And then obviously with proper risk management. And then obviously taking good trades. And that's all you got to focus on. So if I'm only focused on taking good trades, and I know that these two things are going to handle themselves, my equity curve should look like this all the time. So even if I take loss after loss after loss, and even if you take loss after loss after loss, I'm obviously reminded myself throughout this entire week and throughout this weekend that I'm number one, still a good trader. There's no doubt in my mind at all about that. And even if you lost this week or had a difficult week, you should obviously be reminding yourself of that. Just to constantly increase that mental, even when it's difficult to do so. A lot of trading is just doing exactly what you say without hesitation. And obviously showing up for yourself when you need it. When price action gets hard, when you lose a lot, when the market is being irrational, you have to show up for yourself when the market doesn't, and obviously when other people don't, and follow and stick to your rules when you don't want to. That's the hard part about trading. All right. Specific question: is there something we can look for on the Asian range, like sweep of the lows to then target -2 and -2.5 at the opposing side? Specifically asking if you understand how you can frame your bias just based off the Asia sweeps and then target the. Yeah, so that is more similar to what's called the Asian range projection. There's 3 projections that ICT used to use for Forex, and that would be the Asian range, the flout, and then the central bank dealers range. I actually have a little thing here for it. You have a central bank dealers range, which is between, I believe, 2 p.m. and 8 p.m. Eastern Standard Time. You have the flout, which is this kind of longer range within that, and then you have the Asian range on the back portion. And a lot of times what you see is consolidation throughout this period. And there's a whole video, I think in month 9 or month 10, about this range. And he actually has not used, at least from my understanding, he's not used these a whole lot in futures or in his analyses for futures. And I don't really know the relevance of it currently. I do know that on certain days where the Asian range is very small, and also on high impact news days, you can in fact use the Asian range as a projection like that. -4, -4.5, and when there's tight Asian ranges, or right before or during a high impact news driver, you can see how well this plays out. Most of the high of the day, the tick right there. Other days you're going to be using CBDR. Other times you're going to be using the flout. But like I said, it's not something that I use a whole lot because from what we've seen, a lot of price action in here, the Asian range has not just been consistently consolidating or giving us one good range. And normally you do have a last manipulation leg that you can use just like the Asian range to give you that for projection. Right? You have this last manipulation leg here. That's going to give you something very similar. You have the last manipulation leg either here, right? -4 to the dot, actually more precise than the Asian range, where I've dabbled in it. I've tried to figure it out. It's something that I'm actually actively studying right now, is how to incorporate these into futures if there's anything to incorporate. But it's when Asian range is small and you preferably have a high impact news driver where Asian range is going to be used as that projection. And you can use it for a target, especially at an all-time high conditions when you don't have buy side or sell side to be looking for, rather buy side rather. You can use it as a projection for targets. Pair that with time of day, you got a pretty good exit. Waited for the macro per my rules, and that saved me. Was able to target 1030, but the fact that I obeyed the rule of only entering the macro meant I had FOMO when others were shorting. However, that decision to wait until macro saved me, and I saw the double Judas play out and got in the long. Exactly. So that's like a perfect reinforcement of, why you want to be patient and why you want to be process focused, because, and even if it was to drop bearish, waiting until the 950 macro, you're going to get a very nice continuation entry. And it may not be at the top, but it may be such a good continuation entry that your risk is still very small on that, right? Like you look at, okay, someone who's going long here sure has a better entry in terms of position wise, but an entry off here with the order block to the swing low is still a 4R. 4R, right? It doesn't matter how many points it goes. If it's a 4R, it's a 4R. That means you can risk the same amount here as you would if here, but your stop loss, you know what I'm saying? So that patience is everything. And I think I was lacking some of that on Friday. And something that that's me actually losing, right? I had one Monday, I had one Tuesday, I had one probably Wednesday as well. Thursday, yeah, Thursday I think I won as well. I was bullish coming to the session, look for flip bearish only until it dropped a certain amount, which was exactly what I articulated prior to the session. Friday was a loss for me because I think I was not psychologically sound enough to come into the market and really look for something that was there, because that's just evident by the fact that I was not waiting for the thing I should have been waiting for. So I had probably not, I didn't break my rules per se. I think I was a little bit too quick to the trigger, which shows a lack of patience. And a lack of patience means I broke my process in some way. So that's something that I want to improve on, and continuously, it's a constant journey, right? I may be a quote unquote mentor or whatever, but I still got flaws. I still got things that I'm working on, and I'm trying to make that transparent with everyone, because when you stop seeking wisdom, when you stop learning, is when pride and greed and this thought that you're better than everyone else comes to fruition. Okay. I am always going to be a student of the game. I'm always going to be looking to get better. Even if it's not in my technicals, it's going to be my psychological game. So to the day I die, I'm going to be a student of the craft, of either of this or whatever I'm working at. I'll never be a master in my mind. Because as soon as I think that I've mastered something, you become lazy. You may not become lazy and it unsuccessful. You may still be successful, but there's always some room to grow or some room to improve on. And for me, my technical goal that I have right now is to be able to take or go for hit once to twice a month, preferably just once a month, take the entire weekly range from low of the week within 50 points to high of the week within 50 points, and take that once a month. That's my goal technically. When I get there, I'll be pretty happy. Not happy, but I'll be satisfied with my progression, and then it'll be on to the next goal. That's not going to satiate me. That's not going to in any way give me happiness, and I know that. It's just a number for me to improve, and it's actually the constant journey of improvement, of seeking wisdom, that provides for me kind of purpose and meaning. When I stop doing anything, when I'm kind of not doing, when you're sitting around not doing much, you're not learning, you're not growing, it's like depressing. You're just drifting. And there's no way in trading and in life that you're staying still. You're either going up or you're going down. Especially in life, right? There's no staying still in life, because at the end of the day, if you're staying still, you're still going down because you're dying in some way. Your cells are dying, you're getting older, so you're wasting your time. And I always want to be on my upscale. Even if I'm 80 years old, I want to be on my increase. It may not be physically, it may be just mentally, and being able to provide to others wisdom that I was given throughout those 80 years. So I know I'm always stacking up, improving, getting to the next level. So that's why I'm trying to bring that transparency here of, I still got flaws. I still got things that I mess up on. I'm nowhere perfect, but you can still be extremely good trader, number one, and obviously be successful in this. And, that's all you really need. It's a constant improvement, constant grind. There's obviously a level, maybe level 25 or level 50, where you can be consistently profitable, and any level after that, it's just maintaining it. don't always think that you're going to be unprofitable or there's something more you have to learn, when in reality it's true, but it's not true in the sense of you can just have one model in your back pocket, the ETM model, whatever it is, and be wildly profitable just trading one model. But you could, instead of learning and improving in other ways, it would just be, how can I refine this model so well where every trade is a 6R or a 7R or a 10R? That's what you want to be shooting for. And it's always the constant seeking of wisdom and understanding in these markets, elsewhere in life, that you'll find so much, I think, happiness from that. Not happiness, but just kind of peace and satisfaction from that kind of grind. All right. So I don't want to make this too long. It's already been going for an hour, and I know no one's going to watch this back past the 20-minute mark. So I'll keep them kind of short. Any questions that I missed psychologically or technically? I don't think Let's scroll up here and see. Or if you got any questions, you can put them up in the chat right now. How do I know Salman Nasiri? I just saw him on YouTube. I don't personally know him. I just saw his YouTube videos maybe like 6 months back. Thought it was pretty good. I don't follow with him now, but I haven't watched any of his videos for probably a couple months, so I don't know what he's up to, what he's doing, but his psychological videos in the very beginning were really good. But to be completely honest, anything psychological, if you want the good kind of content, it's going to be from the older gents. Mark Douglas, Randy Howe, all those guys who've been in the game for 20 plus years. You'll see ton of stuff that's important for them. I was the owner of his WAP initially. The owner of his WAP? Or I was in his WAP? I think I joined his WAP for about a month just to see what he was doing in there. Just to hang out, but there was really nothing in there that I was interested in. So I was in it for maybe a month, just checking it out. Yeah, so sometimes I do that just to sneak around and see how these guys, not even for the content wise, but just how are they setting it up? How can I improve my own Discord game? I'm not really much of a marketer or guru or whatever, so you don't see me flashing stuff around, which has its cons in attention. I don't really have the attention grab that a lot of other people do, but I think the content that I post is probably 10 times as valuable as others. So it's a plus and a minus, but to me it's a good thing. I'm never gonna say, hey, look at me buying this $200,000 car. If I got it, you're not gonna see it. I'm not gonna lie. When I was in the Bahamas, there was a shop owner, and I actually did an interview. It's supposed to be in that video that I was gonna post, the whole vlog, like a 10-minute vlog, and I actually did an interview with this guy. He's a shop owner. He's a multimillionaire, from what I understand. I'm not gonna expose too much about him because that's his own personal business, but he's a pretty wealthy guy. And he just lives in the Bahamas. He just was outside smoking a cigar, just chilling. And you learn a lot from people like that. You know, people who have found peace in their own realm and are always there to just share. And the Bohemian people are fantastic. Like every single person, you could start up a conversation with them and they're pretty chill. But I did an interview with him, and he was talking about how poor people flaunt their wealth and want other poor people to know that they are rich, in quotation marks, whilst rich people don't want any of that. They want to be, not seen. And a lot of the wealthy stuff is, designer thought is to be seen more than it is a replication of wealth. And I don't think wealth is a money thing. I think wealth is a mental state. I think if you're you can be wealthy and poor, in your bank account. To me, wealth is about my time. It's about who I spend it with and the opportunities that I'm able to provide to myself and to others. That's wealth to me. And it's 100% true, when to each their own in some sense, but what's the point in flexing that I'm at level 50 compared to someone else who's at level 25? Just doesn't. Why wouldn't you just help them come up, and then when they're at level 50 with you, then maybe you could do that. But I don't think there's any point in posting shopping vlogs or things like that just to show, because to be completely honest, then it actually produces a negative mental state for anyone else who's watching, because it feels like you're below them in some sense, or it's unachievable. And I never want that to be uh, something that anyone picks up in any of my videos. Even if I'm showing an execution, I spend 20 to 25 minutes showing everything before the execution, and then the execution itself, to say, okay, this is everything first. Here's the execution. Here's how you can replicate it. And you don't. I'll never show P&Ls and things like that either. I did it one time to some people, but I'm not gonna do it ever again. I have a specific question about dealing ranges. What time frame should you utilize dealing ranges effectively in regards to the daily range and the session range? Daily range, you can use the 1 hour or the 4 hour. Session range, you can use the 15-minute and the 1 hour. Oh yeah, you answered your question there. I just saw that. Yep, I reviewed Friday's price action earlier in this video, so when I post it, you'll go back and see it. P&L flash? Nope. I see Mr. Wade typing. Would you tell yourself to stop tilt / over trading? How do you calm yourself mentally? That's a good question. I think. Well, let's get this out of the way first. Psychology cannot be beaten by willpower alone. It cannot be beaten by willpower alone. So, if I were to make, if I have a losing trade or whatever, and my mind is constantly giving me information or negative thoughts, spamming those negative thoughts, my willpower alone can only maybe combat 5 out of those 10. Eventually, my mind is going to win, and it's going to have enough energy to influence my behavior. And Mark Douglas talks about this. So how do we stop ourselves to tilt and overtrade is really just to assess, number one, what causes that, right? What's the mental state? Number one, when you're in it, how do you defeat it? And there's not going to be really any after. And obviously, how does that thought actually materialize into the physical realm? So I want to, in number one, be reframing my mental space to only produce thoughts in line with my overall goals and such, right? So when you really look at it, normally, over trading and over leveraging is a coping mechanism. It's a coping mechanism normally brought about in early stages of trading when you start to lose. So as a attack against the bear that is the market, the thing that you have seemingly no control over and has now threatened your survival, right? You can't control the market, number one, right? I can't tell it to go up. I can't tell it to go down. Okay, so we know we can't control it. And number two, money in nowadays world, and obviously since probably the invention of any currency, is a way of survival. You don't have money, you don't have shelter, food, water. If you do have it, you have a plentiful supply of each of those. All right, so as we have an attachment to money, which is kind of psychologically rooted into us, losing has that possibility to threaten us. And as a solution, we are going to get bigger, stronger, and attack that sort of thing. That's normally a very manly response. I don't think females have that much of a response as much to it. I never really taught personally any female traders, like in my own personal life. Only 2 male traders, so I don't really know that as well. But either way, over trading, over leveraging is a product of early early kind of scar tissue created by negative thoughts. So I don't want to have to just constantly attack and use my willpower as a shield against these mental thoughts. So we first have to understand why is it that we think this and really look at it. Okay, is over leveraging and over trading the way that I've been doing it going to actually get me to those long-term goals? You sit down and actually think about it. Okay, is me pressing this button after I lose going to actually give me the long-term goals? Or is it just going to delay it even longer like I've been doing for the past X amount of time? Okay, so then once you acknowledge that, okay, there's actually no reason for me to be doing this, especially if I know how to trade. Um, it already automatically puts up a block a little bit in your mind where you're like, okay, I know I'm not supposed to be doing this, and actually, over leveraging and over trading has no help whatsoever in me reaching my goals. So that's already kind of stripping away some of that negative energy from the belief. Number two is to become completely process focused, which is what everyone talks about, and I talk about a lot. But the only way that you beat kind of any sort of monetary focus is by becoming process focused. You can't just not think about money, right? You have to not think about money, but then also think about something else. You have to replace it with something. Um, so how can you be process focused? Is obviously it is through brute force in some sense of constantly reminding yourself. I'm a big believer in, if you've ever read Think or Grow Rich, or if you haven't, I suggest you do it. In um, it's called now I'm forgetting, auto suggestion, where if you want to influence your mind in some sense, you have to constantly re-remind and almost drill it in, right? You think about the news, you think about all this stuff that you see around the world, even with social media. It's the constant drilling of fear and of other things that make people act a certain way, right? You can see it in yourself. I actually even saw it last week. I was going to do a whole psychological rant about social media. I held my tongue for it, but I literally downloaded Instagram for like someone posted something that I had to go and like and comment on, and then I was just scrolling around on Reels for like literally like 30 minutes. Number one, I was like, okay, I'm already getting sucked in. But number two, I was like, it was almost like every 5 reels was something to induce fear. And I could literally feel myself like getting like scared about things. It was talking about, the Genius Act, about central bank digital currencies, about lack of privacy, about whatever's going on in the world. Things that I honestly don't care about normally. Just that constant drilling and seeing it was producing that fear. And I literally noticed it happening and I turned it off. I deleted Instagram again off my phone and I'm back to nothing. I don't even got YouTube on my phone. So we can actually flip that and do the other thing, which is actually using auto suggestion for positive reinforcement. And you have to mix thoughts, words, and actions. They can't be rooted. You can't, obviously, you can spam them over and over again. You can journal, you can write about it, you can say it in the mirror, but you need to mix it with the concoction of belief. You need to generate belief and faith in this idea that this is exactly, number one, what needs to happen, and that you believe it. If there's any lack in belief, lack in faith, these things mean nothing. There's going to have no effect into your subconscious and be able to auto suggest these habits or thoughts into your subconscious. Because what we want is reframe the mental space so that it only produces the thoughts that are in line with my overall goals. So if I do lose a trade, I know that, okay, was that a good trade? Yes or no? Yes, do this. No, do this. And it's going to end up, goes back to the same exact thing. Good trade? Yes, no. And it ends up, they both go back to what? Follow the process. And there's no room for thinking. Okay. Number two is, so obviously we have to mix the words, actions, and thoughts and force that into our brain in some sense until it becomes subconscious. And that comes with rigid discipline. There's no solution. There's no cheat code. There's no anything besides discipline, right? That there's no shortcut around it. You have to mix this with discipline until it becomes automatic. Okay. You want it to become a habit where eventually, if you do it for long enough, it's actually easier for you to not overtrade than it is for you to overtrade. And then kind of as we go into it, number 3 is you have injecting logic that you say to yourself when you see these things start to rise. Emotions are a signal, number 1. Emotions are never the problem. Emotions are a signal. Injecting logic that you use to reinforce yourself before, during, and after the trading day. Number 4 is to spot any negative expectations or unrealistic expectations about outcomes. So, for example, if you want to pass a funded, if you want to pass an eval, if you want to win, it can be as simple as just wanting to win. If you want to hit whatever specific goal, in the beginning, a lot of these can be emotional flaws that because we have some sort of expectation about the outcome, when that outcome is not met, we are left with disappointment, okay? When reality does not match our expectation, we're left with kind of this void that we have to fill. And we fill that a lot of times with dopamine. We fill that with obviously over leveraging and over trading. So we can't have any expectations about the day related to outcome. Simply about, I need to follow my process. The process could be not taking a trade. The process could be taking a trade. The process could be taking a losing trade. But if the model was there, if your bias was there, you have to take that trade. It's like you have to be, and if it doesn't work out, you look at it like this, as a learning opportunity where I can come into this and see what I did wrong, see how I can break it down for myself and for others to then see exactly what I can improve on. All right. And then number 5 would be not letting the thought generate action. Okay. The more that you think about the thought and the more that you let it play into your brain, the more that you have inaction, meaning you feel that thought pop in, you have a losing trade, and the more that you sit at that desk without any sort of action to combat those kind of negative thoughts, even if they're there, you're letting it grow. You're constantly feeding it energy. You're even if it's subtle, you're constantly giving it energy. Think about it, you 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 think about it. And eventually it generates action. And in this case, negative action. You don't want that. So as soon as you start to see that thought fly into your head, it takes a great amount of self-awareness for you to even spot thoughts like that. And that's a major thing about trading. But you have to, number 1, not let that thought generate negative action, not by willpower alone, by going back to number 3, which is spamming the injecting logic with belief, right? Okay, you get stopped out on a good trade. I pay my stop loss a good amount of money to do its job properly. So now it removes and strips away completely the fear of, was my stop in a wrong position? Or what if it didn't do its job or whatever? You combat that with some sort of injecting logic and faith and belief. There cannot be fear and faith in the same exact thing. You cannot be scared of something that you completely believe in, right? It's normally this lack of faith and lack of belief in your model, in your ability to trade, in whatever that generates fear, that generates FOMO, that generates whatever else. So you can see how it's not just a one-step solution. I can say a bunch of, and there's probably way more to this. I can go on for hours talking about psych, but this kind of step-by-step process is going to be the most beneficial, and starting from the top to the bottom. You cannot simply just go to number 5. And as soon as you on Monday, you take a losing trade, you think that, oh, I'm just not going to think bad thoughts. See how that goes for you, right? And you probably tried that before and it just doesn't work, because I know, and I've done it before. You cannot beat it with willpower alone. You have to change the entire mental structure and framework for it to work. And this is the order that I normally use. And reading books, I think there's two phenomenal books, or actually 3 great books that I'll suggest to anyone who wants to read and learn more about psychology. Disciplined Trader, to me, by Mark Douglas, is probably the best psychological book. I was always looking, for the past 4 years, I was always looking for something to like articulate exactly how to fix problems and not band-aid solutions. I hate band-aid solutions of, oh yeah, you just do this and then you're just going to be a profitable trader. And it's not how it works. The disciplined trader talks about, number one, how those negative beliefs form, how to spot them, how to fix them, and how to maintain a profitable mindset. This is a phenomenal book. Number two, Mental Game of Trading by Jared Tindler. Number three, Think and Grow Rich. Not as much about trading here, but definitely applicable to it. I would say 90% of the book is applicable to trading. So if you were to just say, okay, I need some resources, or you want to learn about stuff, YouTube videos are great. But and then if you want like people to listen to, Mark Douglas, and then maybe Randy Howe. I think I spelled his name wrong, but a short form content video on Twitter talking about psychology is going to do jack squat for your mental. Same thing with a 10-minute YouTube video. You know, you're going to watch it, you're going to feel motivated, you're going to feel whatever, and then the next day it's going to do nothing for you, to be completely honest. So no amount of short YouTube videos, short form content is going to do anything. You want to look for long form content of people talking for hours or 40 minutes or whatever, or books, 200-page books that are written 30 years ago from real traders talking about the same problems that you have, because there's nothing new under the sun. Your mental problems are my mental problems, and my mental problems is the next guy's mental problems. And there's no difference between me and you, or a profitable trader or unprofitable trader. It's just the way you think. That's it. There's some technicals in there, but it's really just the way you think at the end of the day. All right. So long-winded answer for probably what you're looking for, but I hope this helps more than, oh yeah, just journal right now. But yeah, and a lack of an abundance mindset. Yeah, you definitely do need to think. I mean, the market's always offering opportunity. It's just a market truth, is that you constantly have to be understanding that it's always offering an opportunity. When you believe that truly, you're not going to have the fear that generates, oh, what if I miss a move? When in reality, you could be buying or selling in every single 15-second candle from a 24-hour period. How many trades would that be? And every single one of those is a trade opportunity for someone. So if you believe there's to be that many trades, right, throughout the day, there's an abundance of setups where if you miss a setup one day, it may be slightly uncomfortable to be disciplined for the next 12 hours to not take a trade, but you just have to wait till the next morning, especially if it's good. High probability, there's your setup. All right. Yeah, journal is not even a question at this point. I 100% agree. You just have to journal. Candlestick and background color codes. Yeah, got you. I'll screenshot this. It's just this blue. And then the rest are black. And then my canvas color is this. That's the hex code for it. Okay, so we'll wrap it up there. I know I've been going for a while. I don't know how long it's been. Yeah, an hour and 18 minutes. So I'll post this up on YouTube later today. If you got any questions, DM to me, and I will be reaching or responding to those throughout the weekend. Probably a busy weekend for me, so I'll try and get to them when I can. But hopefully, better week next week. We got PPI, CPI, unemployment claims, bunch of good news. So trying to capitalize on that and probably smash it out of the park, Lord willing. And we'll take it day by day as usual. So review this last week's price action if there's anything that you lost on. I know this is a good probably refresher for some and for myself. And then obviously review your journals as well. Read those, make sure you're implementing whatever it is you got to fix, and constantly getting better day by day. All right, so till I talk to you next time, enjoy the rest of your weekend and be safe. Peace.